Rory?
Yeah.
Say hi to Andy Hoffman while I add Peter.
Hey, Andy, how are you doing?
Good, yourself?
I'm doing quite well, thank you.
This is quite the technological achievement, all linking all the Skypes.
Yeah, it is. And you know what I have a tendency to do? I have a tendency to not add people. I just hit the dial button for the other guy, and then I cut everybody off. So it's my apologies. Right now we have on the line Andy Hoffman from milesfranklin.com, a dear friend and a pundit who knows more about the banking cartel than just about anybody else we talk to. Andy, thanks for joining us.
Oh, it's always a pleasure. I'll have to live up to that moniker.
Well, you know what? I'm not blowing sunshine, brother. You know, the last time you and I talked, I think it goes back a couple of months anyway. One of the last times we talked, we also interviewed David Morgan for our video called Sub $20 Silver, which now has 27,000 views. And I think it's because people knew that those were bargain prices. We see the dollar down, the bond market is rolling over, the stock market is showing its cracks, and meanwhile, Andy, silver has rallied 26% in the past 7 weeks. It's nice to have some good news to talk about for a change.
Yeah, well, good news for silver, bad news for the rest of the world. And, you know, when we talk about all those markets falling at the same time, you know, for one, we can discount, quote, the dollar because it's kind of immaterial what it does at any given time against the other trash currencies. Although I will say I've been writing quite a bit about the Indian rupee, which is right now in free fall. And, you know, I wrote a piece yesterday called India the Next Egypt, except India is about 20 or 30 times larger. And I really think there's the potential for a major revolution there over what the government has done by destroying the currency. And as far as the markets go, obviously, the most important thing to watch is the U.S. Treasury market, particularly the 10-year bond, which has been in free fall. And look, I've been in the markets for 25 years now, and I have never, ever seen stocks and bonds fall at the same time, or Treasury bonds, I should say, because, look, we've been in a bull market for bonds. People haven't even realized it's been a 30-year bull market, partly because of things like QE and kind of a bit of stupidity of people who don't understand what real inflation is. But the fact is, the government has been able to keep the bull market in bonds going for years, and you know what? It's over. I mean, it's really, really over. And now that interest rates are going to be moving up, and it'll start here, it'll move around the world, I don't think there's anything the powers can do to stop the ball from rolling down the hill.
Well, and I just caught myself in a bit of mental programming here when I threw to you with that question. I said, it's about time we have good news to talk about, when I just actually shared a litany of bad news. The only good news there was the rally in precious metals. And I think that's telling us something. It's telling us something very, very profound. To see gold rally, to see silver rally, to see gold in backwardation. Well, you just returned from China, too, where you got to see firsthand what a powerhouse China has become. And they're hoarding gold. They're trying to get their hands on gold. Gold consumption is up in China. Tell us about your trip to China.
Yeah, first up, we'll just say, look, with all the markets falling now, and precious metals rising. I mean, there's a lot of theories out there of why precious metals were smashed so hard this year, starting in February. Look, I mean, they did the same thing last year. Remember, they did the leap day violation, took the prices down. They bottomed July, August, and went up for the rest of the year. The same exact thing has happened this year, except on a bigger scale. And again, if you remember the leap day violation, it was all about they're going to taper. They called it an exit strategy then, but Bernanke got up on Capitol Hill for his Humphrey Hawkins testimony, said pretty much nothing, but the media spun it that they may end QE, and of course they didn't, and gold went right back up. And the same thing here, except this time around, you saw this massive short covering by J.P. Morgan and the other commercials, to the point where some have almost speculated that the whole purpose of this year was to enable them to move to the long side. But either way, the game is over. The economies of the world are not getting better. They're getting worse. And now that interest rates are going up, the Fed is going to be faced now with not whether they should taper or not, with whether they should announce QE5. And believe me, if that 10-year rate on the treasuries goes to 3.5%, I can almost guarantee that they will announce QE5 before year end. And, that's when it gets really scary, because that's when the entire world starts to think maybe we should call the Fed on this BS about them keeping rates down and improving things, and maybe they're just hyperinflating. And as for China, yes, I was there for 2 weeks. I was in Hong Kong. I was in Guangzhou. Most people have never heard of. It's the third largest city in China, the ninth largest in the world. Really, no one has heard of it. Even I hadn't heard of it. It's a thriving modern city. And I went into those gold stores, and you really have to see them, not just pictures or stories, to believe it. Every one of them, tons of them in a row, and they're all full of people, lots of savvy salespeople, and they are buying. They're buying gold coins, they're buying gold Buddhas, they're buying gold jewelry. You go into a gold store here in the States, you're lucky to see one person in there. There you see 10 stores in a row full of people.
Andy, with the derivatives market being estimated at between $700 trillion and one quadrillion dollars, and the interest rate swaps making up 40% of the derivatives market, and the 10-year bond just went to 2.84, and you made reference to it going to 3.5, and it being game over at that point. How in the world are these guys going to be able to unwind this massive nightmare with interest rates rising? I mean, it just seems impossible.
Right, that's the whole point. They can't. And you know what? You could take out the derivatives for a second. Pretend there's zero. They never invented these things. Of course, we'd have never gotten to this point without them. But if they were all gone and they were immaterial, it wouldn't matter. The fact is that because the entire world is now so addicted to ultra low interest rates, particularly the United States, which has the most debt and it's lost all of its manufacturing capability. Even the tiniest increase in interest rates, like we've seen in the last month. I mean, we're talking about just going up 1%, has caused, consumer confidence is rolling over. A lot of the other economic data is rolling over, and of course the stock market is rolling over, and people are starting to show genuine fear of what's coming ahead simply because of a 1% increase in interest rates. Look, they try to talk about the sequester, which was to cut down $80 billion of spending per year. Well, this 1% increase in interest rates just increased the annual debt service of our $17 trillion by $170 billion. So the point is actually utterly no way that they could taper, let alone try to sell anything. And by the way, has anyone seen that it just came out that Japan and China, who are the number 2 and 3 holders of Treasury bonds after the Fed itself, have shown their biggest selling ever in the month of June. And you can bet that if they were selling more in July, we'll see that, and certainly here in August. So there's just so many factors that are finally causing irreversible headwinds to the Fed. Because I mean, look, I think we all know if the Fed tries to announce QE5, let's say the rates keep going and they go to 3.5%, and the Fed comes out in their September meeting, let's say, and says, yes, we're upping QE from $85 billion to $120 billion. Does anyone really think at this point that that's going to help the Treasury market, that it's not going to just cause the total outright fear of, holy cow, they've lost control of this? I mean, that's where we stand right now, and that's why I believe that we are so close to the end game right here.
Well, then I have another question that ties right into this. And a couple of days ago, Zero Hedge released or put out an article saying that 60% of home sales are 100% cash. Now, and the question I have is that what impact is that going to have on the bond market and the Federal Reserve doing their $40 billion a month of MBS purchases? I mean, what kind of effect is that going to have, or is it having an effect?
Yeah, even the BLS, the Bureau of Labor Statistics, who does most of the economic data, has admitted and shown graphically that half of all of the GDP for the last few quarters has been related to the housing bubble or market. Okay, and as a result, now that you see interest rates going up and all this Wall Street money that was running in and buying cash deals, they're going to just sell them. I mean, 20% of all the deals forever were cash deals, and now 60% of the deals, because, like I was saying, the average person has lost everything. The average person between the 2000 and the 2008 stock and real estate crashes, is lucky to have a job. And that's why there's so many people on food stamps and disability and other entitlement programs. So right now, any semblance of recovery was a mirage based on Wall Street financing with ZIRP funds, and now it's just going to roll back over, and there'll be no more bubbles left to blow. Look, the only bubbles left with this echo bubble in real estate, this shallow bubble in stocks where there's no real retail participation, and of course the Treasury bond and dollar markets. So right now, what's left to blow up? It's going to be gold and silver, because that's where people are going to go when they fear that the Fed has lost control. This is all about the Fed showing they have control. And frankly, this catastrophic, and I've written about this for some time now, this absolutely catastrophic decision in June to go with the let's pretend that we might, not we will, that we might taper if things go our way. It was the worst decision Bernanke ever made. It's fitting it'll be the last one he makes, because right now everyone in the world is starting to realize that the Fed is not in control. And God forbid, when they announce QE5 and bonds go down, not up, you'll know that the game is over. And if you don't have your gold and silver by then, you may not get it.
Yeah, and we see it all over the planet too. As the Germans demand their gold back, the Fed says it'll take 7 years. The Germans say, can we at least see it? And the Fed says, well, we have 7 vaults. We'll show you one, but you can't touch it and you can't look at the serial numbers. I mean, the jig is really up. And now we have Michael Snyder at Economic Collapse blog. You've talked about this, saying, how much is a quadrillion yen worth? It's worth $10.5 trillion. And the Japanese are in deeper debt than the economies of Germany, France, and the UK combined. I mean, the jig is truly up. You hit on this earlier. It's kind of amazing to watch the stock market fall and the bond market fall at the same time. It's so rare. Usually people bail out of stocks and get into bonds as safety, but are people finally waking up to this ruse that bonds will provide them a safety net in the future, that there's some sort of shelter from the storm? They must be. And the only true shelter from the storm are physical precious metals, as the Germans have learned.
Right. I mean, it's been among the greatest propaganda campaign of all time is the safe haven of the Treasury. It's amazing people still consider the dollar the safe haven, considering the dollar index, after all this excitement, is still down 30 or 40% from where it was 10 or 12 years ago. And think about what your cost of living was here in America 10 years ago compared to today, and you'll see what I mean by that. Now, as for Japan, on a per capita basis, their debt is vastly worse. As you said, they have 11 trillion of debt, but look at how many people they have, not far less than we do. And the problem is that those people all own the Treasury bonds, as opposed to in the States where other countries own it. So these people are literally the oldest country on earth, aside from, I think, San Marino. So they desperately need their money to pay for retirement. So they are selling hand over fist. Heck, the government needs money because they need to buy stocks with it and to buy bonds with it. So right now, Japan is going to be a major net seller of United States Treasury bonds, and that's just going to make it even tougher for the Fed to keep rates down across the board. And again, as you said, literally my entire life, I can't think of more than 2. In fact, I wrote a whole piece about stocks and bonds going down at the same time, and I showed how literally only one time in the top 30 Dow declines of the last 5 years did bonds actually go down that day. And now it's happening, days on end, because the bull market in bonds is over. It started in 1980 with the whole Paul Volcker raising rates. It's ended now in 2012, 2013, and wait till people see the damage that it does. It will make 2008 look like, as they say, a walk in the park, because there will be no way that the powers that be can fix it with printing money.
As I sit here and think about this, and we've talked a long time about the collapse and the fact that Americans eventually will be squashed by what's coming. We've been talking about it for a long time. James Turk, John Williams talking about hyperinflation of the dollar. There's so many omens and black swans on the horizon. There's so many bad things that could be coming our way. But can you, for me, what is your position on the people of Japan? Are there a people on the face of the planet more screwed than the Japanese? Because I tell you, between Fukushima and their insurmountable debt issues and the fact that they don't have the world's reserve currency, so they don't have much of the forgiveness we've enjoyed, how hosed are the Japanese? And are we ultimately just as hosed as the Japanese people?
Well, it's all relative, of course, but I would say Japan is far from the worst. Look, the government financial situation is terrible. The demographics are terrible. The fact that even their manufacturing business is being lost to low-cost places is terrible. But the fact is, the people in general have been savers for all these years, and they don't have a deficit, a surplus like they used to, but they don't have the deficits like we do over here. And the yen may not be the world's reserve currency, but it's far better than, say, the Indian rupee. So I would say the people of Japan, on a personal basis, are going to see a decline in the standard of living. But again, they're very old people. They don't really care as much. I say, if pound for pound, you talk about black swans. I've talked about it a lot, particularly in the last few weeks. For the past year, my number one pick for the nation most likely to start everything collapsing was Greece, and I still think it's right up there. They have $500 billion of debt, and their economy is at its low point and getting worse. They're going to renege on that debt, and they're going to be out of the euro. It's just a matter of time, and that'll cause a domino effect throughout Europe. But pound for pound, I have now raised India to my number one. There's 1.5 billion people there, and their currency, which is, that is literally a third or fourth tier currency, amidst a country where people hate paper currency, is literally in free fall right now. I can't emphasize it enough. The price inflation that they're seeing food is as bad as in Egypt. And like Egypt, the people of India spend more money, more of their percent of their income on food than anywhere else. So I truly think that the possibility of a major revolution in India is as high as anywhere in the world right now. And who knows what that'll turn into if things start to become like Egypt.
Yeah, it's funny that you'd mentioned Greece again, only because we're going to be speaking with Bill Still soon, and Bill is working on a new documentary, and he's heading to Greece to shoot the documentary, and his position is fixing Greece. It can't be done with austerity, which I think that you'd agree with, because austerity is just a bankster game. Less for the people, more for the banks. Cut social services, cut programs, cut anything for humanity to pay the banks. What is your position on that? Do you think Greece can be fixed with austerity, Andy? It's a loaded question because I know you don't. It can't be fixed.
Nothing can be fixed, and particularly not Greece. But again, this isn't even a matter of austerity. Remember, we were told, you should sell gold because all these countries are going to be austere and fix things. And of course, they're all far worse than they ever were before. But not only that, they've already said we're no longer doing austerity. They originally they said, we'll give you your bailouts if you do these austerity programs. Well, now they said, we're not doing the austerity more, but okay, we'll still give you money, because they can't stop. It's like the QE to infinity. If they said one day, we're going to stop bailing you out, Greece, we're sick of this, guess what? Greece defaults on its $500 billion of debt and goes out of the euro, and everything collapses. So now they don't even play games anymore and pretend they got a plan. They just say, okay, here's another 5 billion euros. Here's another 10 billion. Do whatever you want. Just don't collapse on us. And yet, month after month, employment goes down. I just saw last month they showed 65% youth unemployment, which I think is like 30 and under. 65% of the public is like literally no one has a job there. And we're supposed to believe that they're going to pay off this debt, which gets larger and larger. No. Greece is gone. Goodbye. And it may be because they have their own kind of coup there. Because those people, the pro-austerity, pro-ECB guys, who remember last spring, they barely won office. Well, you can bet that if they had an election today, those pro-European bailout people would be kicked right out. And for all we know, it would be one of the neo-Nazis who gets in, or one of the other groups, Red Dawn or whatever you call them, and they would say, we're out. We're reneging on our debt. We're out of the euro. You guys can do whatever you want. We are going to be the new republic of Nazi Greece. And it'll happen in other places too. I mean, why not Portugal? Why not Italy? I mean, look what's going on there. There's so many places that this is happening. And then you have the places like India who don't even have first or second tier currencies. They can literally hyperinflate at will.
Well, it seems to me that those with precious metals in hand, Andy, are feeling much better about their decisions, as we've seen, silver rally 26% in short order here. In the couple of minutes we have left before we lose you, Andy, what kind of demand have you been seeing over at Miles Franklin? I would imagine as prices go up, the phone starts to ring more, which is ironic.
Well, I'll tell you, it's funny. The summertime is typically relatively slow unless a major crisis is going on. Obviously, 2011, when gold was just exploding and you had the whole debt crisis and the S&P downgrade of the United States, that was a busy summertime. But aside from that, it's typically slow. And just as they did last year, as I said before, they had this big smash that started in February, March, and by the time you got to the summer, prices were down. So it's been extremely slow across the industry throughout the summer. And I can't say that we've seen this big pickup in the last few weeks, and none of our competitors will either. However, you will see across the board that the silver premiums have stayed stubbornly high, particularly in junk silver, where it's still spot plus $3 or $4 an ounce, which should tell you a lot since it's so slow right now. Because I think we're going to, at the next big move, let's say silver does move now to the 30s, I think we're going to run out of junk, and it's going to start to trade at astronomical premiums, and the same will go, of course, for silver eagles and other. But that said, you look at the U.S. Mint sales, for instance, and they have continued, if you're talking about silver, to be extremely high month after month. You also look at what's going on around the world with the physical buying, which is why the GOFO rate has gone negative, which is why you've seen backwardation, which is why you've seen record imports into China. The fact is, people put too much weight here in America on, well, what are we seeing at Miles Franklin and Apmex and Tolving? In general, U.S. customers account for like 5% of all the worldwide buying of precious metals. And here we've had this massive propaganda campaign that all's well and we're going to taper and the housing recovery and the economies, et cetera. So here it's been very quiet. Around the world, it's never been stronger. And even in India, where, by the way, they literally just announced on Thursday that they're banning the importation of all gold, smuggling is at an all-time high, and it will only get worse. So the fact is, we have yet to see it here in the States, and based on what we've seen in the last few weeks, but I assure you it's only getting more insane across the board around the world. And now that we move into the fall, where our business typically picks up anyway, and it's the seasonally strongest period of the year, and all these crazy things are going on in the world, interest rates rising, we have our debt ceiling issue to resolve here in the States, things that are going on in Egypt, what's going to happen in Europe when they come back from their vacation at the end of August. I expect that we could see record-setting demand as we move into the fall.
Yeah, I would imagine so. And I think if the phones aren't ringing off the hook now, Andy, it's really no surprise, because despite the bonds, the pricing in the 10-year moving up, despite the stock market selling off, despite all of this world chaos happening globally, financially, in the derivatives markets, most Americans are truly sound asleep. They still don't get it. They still don't understand that, according to Mike Maloney, who I interviewed recently, we're in the 6th stage of collapse of an empire, which is the loss of purchasing power, which triggers a loss of faith in the currency. And stage 7 is next, and that's when your phones start ringing off the hook. The currency collapses, and gold and silver revalue. Yeah,
well, just remember, in the United States, aside from only having 5% of the buying historically, we only have about 4 or 5% of the world's population. So it really, frankly, doesn't matter if Americans stay asleep, because the cartel is going to get overwhelmed whether or not they're asleep or not.
Yep,
and
that's true.
But the fact is, of course, they're going to get scared, because our media, as cheerleading-ish as they are, they're also very sensationalistic. And once they see markets falling, when they see gold rising, they'll start writing about it and talking about it to get ratings, and people will come flooding in. And look, I mean, it's just amazing how little actual supply is. I mean, God, in silver alone, we've had 2 episodes this year alone, this horrible year, where we've run out of supply. First in January, where the mint ran out, remember, for 12 days, and then, of course, in April, where we saw record premiums across the board after the alternative currency destruction. That's just 2 months. That's twice in just 8 months. So wait till you see when you have a real crisis, when not just prices of precious metals are hit, but when there's real crisis around the world. You're going to see us run out of silver so fast, it'll be like 2008 in a blink of an eye, and people will be going, why on earth didn't I buy this stuff? And by the way, the same thing's going to happen to gold. It's just that silver is far more tighter because there's just so little of it out there.
No, I entirely agree with you, and I think that what will happen as we look forward in the crystal ball is Americans will finally wake up as things get really bad in their stock market, in their paper portfolios. As they start to wake up to the truth of what's going on, then they'll start to look at gold and silver. Silver will probably be north of 50, closer to 100. You know, just like Apple was once a $12 stock, but people had no allergies to buying it at 4, 6, 700. And I think the same thing will happen. Right now, as we're talking, silver is around $23 an ounce. And I think people will look back on this in a couple of years, and it could be $230 an ounce, and people will be buying. People say, well, how can we still have an economy when silver's at $230 an ounce? Well, I don't know that we will, but I do think that is where the physical price of silver and gold is headed, much, much, much higher. Hey, Andy, I want to thank you so much for your time, and tell people how they can take action today to work with the friendly people at Miles Franklin to secure some precious metals for their own safety.
That's right. We're Miles Franklin. We've been around 24 years, one of the largest bullion dealers in America. You can call us at 800-822-8080 or go to milesfranklin.com or email me at ahoffman@milesfranklin.com.
That's right. And if you guys visit sgtreport.com, there's a banner for Miles Franklin at the top of the page, and you can click on that or take a look for the phone number right there. Andy Hoffman from milesfranklin.com. Thanks for your time, man.
Not at all. Take it easy.
All right, brother. We will talk to you again soon.